Good afternoon. This is Brad Dennis with BIS Commodities with your weekly update for the first week of April. Been a tough week on grains. It's been a tough week on equities as well. Cattle didn't fare any better today, so kind of a negative week all the way around to start out the second quarter. First, we'll go in. We'll address the grain markets. If you look at where we opened up on Sunday night and you look at where we closed today, about 50 cents lower in corn, maybe about 43 cents lower in beans. Monday and Tuesday traders came in and we were still feeling the effects of the quarterly stocks report from last week. When you look at that report, the newfound bushels for corn surprised everybody, and that's where the pressure came from. And in the beans, we also saw a little bit of an uptick in that ending stocks number from what we believed we had. So pressure on prices, and that continued on Thursday last week, Monday, and Tuesday of this week. What is significant about that is usually you see the spec funds or the money managers working about a 3-day period. So they liquidated a lot of their longs there. Not to say that they're all out of the market, but they did move to the sidelines after those numbers. Now that was Monday and Tuesday's trade. On Wednesday, we had some new themes that arrived into the market. Basically in the beans, bird flu. Once again, bird flu in China has come up, and a lot of traders are worried about the culling of poultry in China, the lack of soybean meal being used because of this culling. And so on, Wednesday, Thursday, we saw some significant selling in the bean market, trying to sell soybean meal first, and that came out of China, and then it came over to our markets in the day trade, and beans were hit hard there as well. Now at the same time, you're hearing a bunch of SRW being bought up by China, a significant amount, and that has caused some short covering in the wheat market. So all of a sudden you've got beans down 15, you've got wheat up 10, and you've got corn stuck in the middle. And that's where corn went for the rest of the week. They didn't follow the beans lower, they didn't follow the wheat higher. They just stayed unchanged basically after the funds got out on Tuesday. Whereas the beans, they continue to feel this pressure as traders are worried about bean demand going forward. You also have to remember, in Argentina, we are seeing pretty good harvest going on right now, and that is causing pressure on the market as well. Kind of interesting to note that the Argentine farmer, though, is nowhere near the amount of sales, or has not made the amount of sales in beans this year as he did last year. So there is more selling that can come in the front end of that, and that's really what we're talking about. We're talking about the May, July, the old crop on both corn and beans, whereas those spreads are really taking down, and they should be when you find higher stocks out there. So those have been the influence over the past couple days. Today we're seeing a little bit more of a hangover from the bird flu, and the technicals are turning. You had a pretty basic uptrend line on the bottoms, or the lower closes in the beans, up to about 1270, and we closed well below that today. So with that lower close, we could see some more added pressure, and we'd have to start checking some other numbers on that. In the corn, once again today we stayed in the middle. I think we were down a penny to 3/4 cent. Wheat up. We still haven't seen the confirmation for the wheat for those SRW sales, so we'll look for some kind of confirmation of that next week. If we don't find it, then I imagine that the wheat will succumb to the pressure as well, or as corn has to as well. Other interesting tidbits that happened this week on the financial side. We saw the dollar have some huge ranges. It rallied up to its highest level this year and then closed lower for the day. So you could say that that's a reversal type trade up there. And what they did is they looked at how the Bank of Japan went in and had a very aggressive quantitative easing program that they announced, I believe, doubling their balance sheet in 2 years by bond buybacks. So really pumping a lot of liquidity into the Japanese market, pulling those bonds off of there. And what they're trying to do is they're trying to regulate that area so that that deflation doesn't continue, and they've been fighting this for 15 years. So we'll see if this happens. The other side of the coin too was the Draghi out of Europe, the ECB talking about a possible recession at the end of the year. With a possible recession, they have tools to even add more liquidity to their markets, which strengthen ours. So when the BOJ and the ECB came out at the same time on Wednesday, boom, the dollar rallied because we were the only one that was talking about withdrawing stimulus policy. And we talked about that through our Fed governors. There were a lot of debates this week. The majority is still in tune with the $85 billion being pumped into the economy on a monthly basis, and they'll continue to do that. But there are some that are saying, hey, we have to take a little harder look at this, and maybe it's time to slow that down a little bit. So that's going to be a debate that's going to be raging in the Fed for going forward. Today we saw non-farm payrolls. Non-farm payrolls came in at 88,000. Well below what traders had anticipated. We had a little bit of a hint to this when we saw ADP data on Wednesday at 158,000 when they were expecting 198,000. So not a complete shock, but shouldn't be surprised about it. Now the other side of the coin is everybody was saying, hey, but the unemployment rate went down. Well, we lost 500,000 workers from the pool of workers. So you're not really seeing the full picture when you look at the unemployment rate. You have to look at the non-farm payrolls. Private sector increased their payrolls by 95,000. The government sector had lost 7,000 jobs. So maybe we're starting to see a little bit more of the sequester, the issues that came relevant at the beginning of the year get into the market a little bit more and see that. Over in the meats or the livestock, like I said earlier, down day for both cattle and hogs. A lot of that has to do with option expiration today. A lot of it has to do with first notice day on Monday. We did see cash trading above where futures went out at, but we're still looking at an issue with demand. Boxes were pretty steady for cattle this whole week. It's just we weren't having too many loads being bought. So with that box demand down, that's just cutting down the kill a little bit, and that is weighing on prices. And once again, you had all your longs having to get out because of Monday's first notice day. Next week, we can look forward to Wednesday and the government's or the USDA's S&D report for the grain markets. Traders will want to recognize or see how the government incorporates the added bushels into the balance sheet, and if that 632 carryout on corn goes up to possibly 1 billion. That's been a number that's been thrown out there. I think that that's a hard one to really justify, but they want to see how much those ending stocks increase. Interesting to note, even if you do increase those stocks and what we've done with the futures price, cash is still strong. We're still looking at 55 over on basis. So it's really, they're still trying to pry the product out or find the product at that matter. So a little disjointed on the cash and the futures market right now. Other things to look forward to next week in the financials. We didn't break through 1530 on the S&P. Looking at that as a support level. Once we get through that, then we'll start to see some further liquidation in it. But we are going to see starting on Monday. Earnings coming out. Alcoa starts out after the close. Traders are already paring back their estimates on what they're looking for earnings, so we look for kind of a dismal earnings season, I think. Probably one that doesn't justify a 1560 in the SPOOs. But we'll have to wait and see, and we'll wade through the numbers. So next week, earnings, as well as a USDA report on Wednesday, and that should set the tone for the markets. So that is your wrap up for the first week of April. Have a great weekend, and we'll talk to you next month.